CrowdStrike earnings are out, and you want to know where's the stock headed next? Should I buy it now? I'm going to update you on CrowdStrike. I'm going to provide a list of my favorite cybersecurity stocks and show you a chart and tell you where I think CrowdStrike is headed next. Now, if you've been following our channel for a while, you know I have a handful of favorite cybersecurity names. But many of you are new, and it never hurts to do a quick recap. So I'm going to break it down for you. So when you think of CrowdStrike, what's the first thing that comes to mind if you're trying to break down cybersecurity into different pillars, into different segments? Most of you will probably say endpoint security, and you see CrowdStrike under endpoint security right here. And for best of breed, you're also going to have Microsoft and SentinelOne. You know that I've covered SentinelOne many times as well. We own that in the community portfolio. The primary difference between CrowdStrike and SentinelOne, they're both good companies, but SentinelOne is much more focused on SMB, those small and mid-sized companies. Now, what's interesting about CrowdStrike, if you look at the development, I've owned the stock since the IPO in 2019. I've been long on it. CrowdStrike has expanded into other areas, and you'll notice here cloud and app security, and you'll see CrowdStrike down here. Under identity security, you'll also see CrowdStrike, and under security services, you see CrowdStrike again. Now, SentinelOne, you're going to see over here, but not here or here. Some other stocks that I like within cybersecurity, you guys know Zscaler has been one I've talked about several times, and I've been long on it for several years. Palo Alto is one that I've talked about many times. I do not own the individual stock right now, but I do think this is a good company, and they do a very good job in several different categories. So it might not be the number one best of breed, but very good in many categories across the board. Of course, I also own Cloudflare. I've been long on that one for many years, made some great profits on Cloudflare, all house shares. And then up here under data and AI security, you'll see Datadog. I like data. I love dogs. We're not Datadog. You also see Datadog over here, again, under the cloud and app security right now next to CrowdStrike. And of course, Microsoft, you're going to see this. You know, Microsoft is in a lot of different areas. Microsoft is this huge tech conglomerate. And even within cybersecurity, they've got their hands in lots of different pots. I did a video on cybersecurity a while back that covers the top stocks and kind of what they do. And it is a very large universe. Now, this is just giving an ecosystem, but it's not even on the massive scale that I did in that previous video that had hundreds of different companies. These are going to be the larger, the most well-known names for the most part. Now, we've been talking about these cybersecurity favorites for years. In fact, going all the way back to when I first started making content on YouTube in 2019, we were talking about several of these names. The conviction hasn't changed. In fact, it's gotten better. It's improved. The fundamentals have improved. The only thing that's changed, well, the stocks have gone up quite a bit if you invested in those years ago when we were talking about them. But of course, that creates more risk because now what is the main problem is the valuation on some of these names is pretty expensive versus, say, 2 years ago. So make sure that you are subscribed to this channel if you're not already, and smash that bell to get notifications so you don't miss a future video. CrowdStrike earnings hot off the presses. So this is a beat on the top and bottom. Guidance is pretty good here. So Q3, this is 2025, non-GAAP EPS, 93 cents, beat by 12 cents. That revenue beats by 26.97 million. Now, if you follow CrowdStrike, you know that they consistently crush earnings quarter after quarter. They're very good at beating the expectations that analysts set for them. And several analysts were actually bearish on this earnings report. And I even said before earnings, if there was one quarter where CrowdStrike would miss, this would be the one, but I wouldn't bet against them because they're pretty consistent. That management team's pretty good. And I'm a long-term investor. I've been long in it since 2019, so I don't have to concern myself too much with gyrations in the market. Now, I have also taken profits on CrowdStrike, like many of the holdings I have in my portfolio. So most of what I own in that primary taxable brokerage, that $2.5 million account, around 80% of that is going to be what we call house shares. In other words, it's just profits. But that annual recurring revenue growth of 27% year over year to 4.02 billion. These are big numbers because they're beating quarter after quarter, 30%, 35% quarter over quarter over quarter, which is very hard to do. The gross margins, of course, are going to be higher on software. This is software as a service built in the cloud for the cloud, right? So you've got that recurring revenue. Cash and cash equivalents, $4.26 billion. This is huge. Module adoption rate rates grew 66%, 47, 31, and 20. And that's for 5 or more, 6 or more, 7, and then 8 modules respectively. And I talked earlier about best of breed when you think of endpoint security. That's the first thing you think of when you think of CrowdStrike. This is that magic quadrant, right? The Gartner magic quadrant. Now you'll see CrowdStrike right here, Microsoft right next to it, and SentinelOne right on the heels of the two big companies there. Now, when I say big companies, Microsoft is a $3.17 trillion market cap, and CrowdStrike is $91 billion, which is actually also a $100 billion company. I remember when stocks like this, look at the chart here. This thing was down below $100 a share just in January of 2023. So this stock at one point was under $30 billion, now $100 billion market cap. SentinelOne's quite a bit smaller than those other two names. Of course, you've got Microsoft, which is going to be a mega cap tech company. CrowdStrike pushing that $100 billion market cap, and then SentinelOne here at $9.05 billion, trading at $28 a share. And you'll notice that SentinelOne is up slightly, probably off of this news. CrowdStrike is down slightly. The earnings call still has to happen. There's always digestion, and the reality is the stock is $364. The 52-week low on this was $200. We will look at a chart here later. I'll tell you where I think the stock could go. But looking at the numbers here, ending ARR, this is $4.02 billion. This is very strong. The net new $153 million. Operating profit $195. This free cash flow $231 million. This is a very good number. In fact, that margin's 23% on the free cash flow. And that rule of 40 score, you want that 40 or higher, it's a 51. Now, of course, with these cloud SaaS names, recurring revenue, we generally look at that EV NTM revenue. Now, CrowdStrike is 20x, pretty much on the nose, a 20x EV NTM revenue. Now, just for some perspective here on Palantir, I remember the stock not that long ago being, $7 a share. Now trading at 65, Palantir is a 47.2x EV/NTM revenue. So CrowdStrike 20, Palantir 47. But when you think of the XDR platform, there's opportunity there. I'm going to look at some TAM numbers as well here in a second. In Fired Up Wealth, we love flywheels, and this is a great flywheel. This is the AI native XDR platform. And the thing about CrowdStrike is AI has been part of this company really since inception. And Palantir goes back too. And when you think about AI, we've talked about this many times on the channel, there's a lot of different forms of artificial intelligence. So machine learning is something that's very basic that many of these SaaS companies have used for many years. But anyway, Charlotte AI, that really encompasses all this from the data layer all the way up to the workflow and development, and that single agent. That's the thing with CrowdStrike. So it's lightweight, it's cloud first, again, built in the cloud for the cloud, and it is AI native. And this gives you a snapshot of how much TAM they think. This is for calendar year 25, 116 billion, and it breaks it down. You think of security and IT ops, 20 billion, endpoint security, 19 billion. This used to be mostly focused on endpoint security, and you can see now they've got their hands in a lot more pots. So that 2029 calendar year, right now we're in 25. So 4 years out, they're talking about a $250 billion TAM. Now, there's no guarantee that happens. That's just the total addressable market they think they can achieve. $250 billion. And we just looked at the market cap and it's $90 billion. Is there room for growth for a company like CrowdStrike? I think the answer is absolutely. What are some of the risks? We've talked about this before, but quantum computing, what does that look like? How do our current cybersecurity programs, how does the current software battle if things like quantum computing get in the wrong hands? And this is just speculation. We don't really know, but it's something you have to think about when you're doing your SWOT analysis, right? And you think about the risks, the threats. But the Falcon platform simplifies cybersecurity, and it's really trying to be an all-encompassing company at this point. And it has a lot of room for growth and for cross-selling. Is it expensive? Of course it is. It absolutely is. One other thing I want to show you is a P ratio, even though we usually look at EV/NTM revenue, but I'll show you that here in a second. Now, we already looked at the Gartner Magic Quadrant. This is the Forrester wave. You can see CrowdStrike, Palo Alto, Trend Micro, and this is for attack surface management solutions, so slightly different. But CrowdStrike, this is going to be a TTM, and this is where value investors look at it and say, well, it's a 532. So for some people, it might not make sense. The thing about this, though, is it's recurring revenue. So they don't have to go out every single quarter and start over from zero. It's a very different thing. Is it expensive? Yes. And I'm not going to argue with you that it's expensive. It is expensive. But what I'm saying is the PE ratio generally, if you're just using a PE ratio on something like CrowdStrike, you would have never bought the stock even when it's $98, and you wouldn't have a 528% return in the past 5 years. Another quick thing to point out here, guys, is the forward PE ratio, although it's still expensive, is at 99.86, And remember, this is before earnings, so this number is even slightly lower. The point here, though, you saw that higher PE ratio. A company like this that's growing quickly does grow into itself very fast, and people do pay a premium for that growth. Is it expensive? Yes, but that's the information to help you decide. This is your decision if you want to buy or sell. Now, that doesn't mean just because the stock's up 500%, it's going to do it again. It doesn't mean you have to change your investing, philosophy or methods just because I invest in companies like this. I worked in software for decades, so I understand these companies. You think of Peter Lynch, invest in what you know. For some people, it might not make sense. We talked about these modules, but I think this is a good visual. So adoption rates, this is showing you how much room could be left for growth, right? So 8 modules is 20%. That means there's 80% more customers that could go to 8 modules. So there's quite a room for growth, not only for new customers, right? We talk about NASCAR slides and sales, and you show all your customer logos. So not only adding new logos, but also expanding the footprint within those existing customers. Quick glance at the growth at scale. Numbers are solid across the board. The company has been doing very well for a long time. Of course, the outage did, damage the reputation, at least short term. I think longer term, it's not going to be much of an issue. In fact, most people, memories are short. Most people don't even think about it anymore. Here's a snapshot with some of the key takeaways. Now, you do see this over 97% gross retention. That total revenue surpassed $1 billion for the first time. That free cash flow, 231. This is great information, some great numbers here for you. Also, George Kurtz, founder and CEO, is a quote, CrowdStrike surpassed $4 billion in ending ARR in the quarter, the fastest and only pure play cybersecurity software company to reach this reported milestone. With over 97% gross retention, customers remain committed to the technological superiority of the Falcon platform and the benefits of cybersecurity consolidation. Those are powerful words. A lot of people wanted to see this earnings report because they're thinking, hey, what's going to happen? Are a lot of people going to cancel CrowdStrike and go to SentinelOne? Based on what I'm seeing here at first glance, it doesn't seem so. I'm going to show you a quick chart. Again, subscribe if you haven't. If this video is helpful, make sure you drop a like, drop a comment, help me get in the algo. Let's get to 100,000 subscribers on YouTube. Now, of course, this is a stock nobody wanted to touch it in 2022. 150, 140, 120, 108, got all the way to $92.25. Now, it ripped all the way from that, basically $100 to 400, under 100 to $400, $398. And then you had the outage, and it got cut in half from $400 to $200. Now, this information here, this has been here for months. These numbers, if you watch a previous video on YouTube, you can go look, type in CrowdStrike plus Fired Up Wealth, you'll find some videos. We talked about these numbers, that this is the range that could happen. We said it would probably break $200 a share. It got right to $200, and then this V-shaped snap from $200 all the way back up here to about $375. It's now $357 in the post market. So here's the thing, guys. It's above the R3, the Fibonacci resistance 3. It's above all the moving averages. This yellow line here is the 50-day moving average. You got the 100 and the 200. Here's your trend line. I like the company. I like the stock, and I'm long on CrowdStrike. And I've dollar cost average on this company over the years. So, my total gain is about 234%. It's 2.89% of my $2.5 million portfolio. So I've got about $72,000 worth at $108.75 cost basis. It's very doubtful that you're going to see it come down to something like this. Of course, that's generally where I like to buy stocks, when they're on sale down here. If you miss that, it's pretty tough. You're hoping for a sell-off probably on this earnings report, so you get something at least below $350 in DCA. So where will it go from here? If the overall market stays bullish, this could push to new highs, 400 plus, but I could also see it breaking down, and it would be healthy for it to come back below 350. But here's the deal. If the market continues to be bullish, and it's bulls on parade, and the earnings call goes well, it might consolidate, it might go down a little bit, bounce around, maybe it gets a little under 350, but any significant pullback like we saw a few months ago, it's very unlikely. This company is doing great things. It's one of the best cloud SaaS names that you could own. And I think if it's something that you want to own long term, you just have to periodically dollar cost average and just buy a little bit every paycheck for a long period of time. Or if you do get a significant pullback in the market, which is likely at some point in the next 6 months, put a stock like CrowdStrike on your radar, on your watch list, and that's where you can add more heavily. I appreciate your time and attention, guys. Have a great rest of your day. Take care.